Hey, good morning, everybody. Ryan Derks here, Derks Financial. I am doing a March recap for our investors and our clients. Um, Real quick, if you're not a client, or even if you are, this is not investment advice. This is just fun commentary trying to keep people in the loop on some of the stocks that we like to keep track of and some of the stocks that you see in your own portfolio. So let's get right to it. Some of the big items that happened in the month of March. We'll start off with GameStop. You guys recognize GameStop. We have been watching this one closely for 6 or 8 months now. Ryan Cohen, in his first full year of CEO, this was the earnings release this past week that everyone was watching closely. Can he, as CEO, do the turnaround story that he was predicting? And the answer is yes. He actually, through his management style, has shown the first full year of profitability, slashing expenses, and keeping the company afloat. They have still over $1 billion of cash on hand, and even though revenue is slightly down, they still killed it on their earnings. Right here, let me read this to you. So here's this image of the last 10 years or so of annual net income, and the description says, zoom out, GameStop's net income was 320 million more than last year. What Ryan Cohen has achieved in the last 3 years is nothing short of remarkable. So what you're seeing there, he came on board around 2020, 2021, right in there. He started getting really involved, but then early last year, he became CEO of the company and wiped off over $300 million of losses, negative income. So it's amazing to see what he's doing there. We'll be very excited to keep following this. Next, we'll get into Lululemon. So, you guys, Lululemon has been so good for us for such a long time. However, we did get spanked this month, and it's actually not as bad as you would think. So, let me show you exactly what happened. So, their earnings came out. Here's what they said. They said, we exceeded our updated guidance, but international is doing better than the US, which is good. And those fanny packs we call belt bags and other accessories are where most of our growth has been. We're in the early innings of our growth story, blah, 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 blah. They're doing stuff with Nike, Tiger Woods. We are getting into men's golf. We have new fabrics, blah, blah, blah. With this, we expect margins to be flat in 2024. Here's where they got hurt. At the moment, we are seeing lighter traffic at our stores in the U.S., and those that do show up are buying less. However, international remains strong. Lululemon did not do bad at all in their earnings. They're growing. Their earnings per share still really attractive. Net revenue, so how much overall they did year over year, still looks really good. Simply put, they said, and I thought that everybody has learned this lesson over the last couple of years, you don't ever say we think the next year is going to be a little less profitable because the consumer is weak. What you say is AI. So anyway, regardless, they had said that they think the outlook for the next 12 months looks a little soft. And yeah, you could see their share price drop. But again, not concerning. They are a very, very healthy company, no debt, constantly growing revenue, really, really strong earnings per share. And as I've told you guys, the reason we like earnings per share to remain strong is that lets us know that the executives are not playing all sorts of greedy accounting tricks. Okay, Costco. Again, Costco's been amazing to us over the years, but we got spanked just a little bit on their earnings this month. But again, let's dive deeper. Why did it drop? Well, firstly, let's look at this. Earnings per share, awesome. Total revenue, not what analysts expected, but still 58 billion, still great revenue. Sales increased, U.S. and international. E-commerce sales increased year over year. One thing that's not on this chart is membership. The number of people who are signed up to be members of Costco increased by 8%. So even though total revenue is down a bit, they increased the number of members that are going to be shopping there by 8%. That is huge for a $100 billion company like Costco. So here, why did Costco take a step back today? I highlighted it right here. Sales came in a little lighter than analysts expected, and that is a primary reason that Costco stock was down 5%. However, Costco membership numbers are strong. It says here, Costco's membership numbers were healthy at the end of Q2. The company had 73.5 million paid household members, which was up nearly 8%. So again, somebody else do the math and figure out what were they around They're around like 68 million or 69 million people. So they had like 5 million new people or something like that sign up. Again, I could be off. I'm doing this in my head, but that's huge for them. Also, I don't think it's in this article, but I did see where their gold and silver, if you didn't realize this, Costco is now selling gold and silver 1 ounce bars on their website, and they are just like blowing through that. That is a wildly popular thing for them. So, all right, let's continue. Target. Target announced their earnings back on what's that, March 4th, and Target, what did they jump? 15% in one day. Target blew away their numbers, and again, Target has been very good to us. We all jumped into Target right about here, somewhere in this range. I don't have the exact number, but right in this range. So they've been very good to us. Let's have a look at why they jumped so much. Basically, bottom line, they just beat earnings majorly. When you get right into what happened at Target, well, their earnings per share, awesome. That was a huge blowout. Revenue, they beat the revenue estimations. Now, here's what's weird about that. Those two items were both good, but their sales fell, their revenue was down, their net income was up, which is pretty awesome to see. What does that mean? How is it their sales are down, but their net income overall is up? Very similar to GameStop we went over earlier. I'll show you right now. This is Target's expenses each quarter over the last 1 year. So 1 year ago, they had about $1.6 billion total of expenses. This last quarter, right now, they're down to 850 million. They've trimmed off like 800 million worth of expenses. So that's really awesome to see. And that's a great number for them, keeping them healthy. Now, one thing, let me go back. I can't go back. I'm going to end it on this note, though. Very interesting. Target mentioned that there is a ton of retail theft still. So it's very interesting to think, are they, obviously you don't want retail theft, but if things get stolen, doesn't that kind of keep things scarce just a bit for Target? And also, if things are stolen, isn't that kind of like a tax write-off as like stolen goods and whatnot? So I'm not sure how that's going to play out, but you guys, that's all I've got for you right now. I just wanted to keep you in the loop on some of our things. Overall, it's been a good month. Our portfolios are doing well. But I just want to give you a few little data points there. Watch my next video on capital gains hikes are at the center of Joe Biden's second term tax agenda. You guys, this is going to be a huge wake-up call for any of you who have money in real estate or stocks. So watch the next video, and we'll go over that soon. Thanks. See ya.